Maneco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Lynette Zang of ITM Trading. We haven't spoken in a while, but it's always nice to have you on, Lynette. How are you?
Oh, Mario, I'm very happy to be here. It's been too long. You're right.
That's
Shouldn't
right.
let this much time go by. So
Yeah.
again,
And what I wanted to tell the viewers as well is that Lynette and ITM are doing a special for you guys. They're providing you with a free gold and silver wealth strategy call with Lynette's team. So there's a link below in the description if you want to get involved and learn more about gold and silver if you haven't yet. So I'm going to put that below in the description. So with no further ado, Lynette, I just wanted to talk to you a little bit about what's going on economically in the US and also monetarily and financially. You, of course, know what's going on here in the UK by now. And just wanted to know if things are really great as I saw President Biden the other day having an ice cream and saying he doesn't care about the strong dollar because it shows that the US is doing great and the other countries are not.
oh, well, first of all, it's all relative, isn't it? Because we're running pretty hot CPI, which people look at as inflation. And if you
Yeah.
believe those numbers, I do have this bridge in Brooklyn that I could sell you because food and energy and the things that we buy day to day are much hotter than the print where they can juggle the numbers. So I would say that, you know, the strong dollar, I love when people say, but the dollar is strong. Really? Have you gone to the grocery store? Because it doesn't matter how many of those pieces of paper you have. It matters what you can convert it into. And people, normal, average, everyday people, they're hurting. And they've been working on the destruction of the middle class, which is really the backbone of employment and of this country, really since 2000. And I think that what happened in 2020 and since has been kind of the death knell. So no, the US is not doing great, regardless of what anybody blah, blah, blah says.
Yeah, and the other thing is, well, except cash, if you're just holding dollar cash, all your investments have done badly this year. I see that the bond market is down about 30%, NASDAQ
yeah.
down 30. Yeah, and
So isn't it kind of like a double whammy, Mario? Because it's not just that the NASDAQ is down 30, but on top of that, the dollar is down in terms of purchasing power. So it kind of covers that up a little bit, or actually markets going up cover that up a lot. But people get all wrapped up in that nominal confusion where they think that numbers matter and they don't really matter. They don't really matter. It just hides the theft.
Yeah, and like gold, for example, in dollar terms, is down about 10%. So you could argue that it's outperformed all the stock market indices, but the people are still gonna criticize us for that. But in other countries, though, like Japan and the UK and Europe, gold is up at least around 10%. And so it's done what it says on the tin. And I think eventually that will happen in the US because in this fiat currency system, maybe you can go over that. The dollar is at the center of the system, so it will only devalue at the end.
Well, yes, it will. And the other part of that is when people look at Wall Street, which please, if you can tell me why anybody believes Wall Street, then I'd like the answer to that. But if people look at the Wall Street contract, the spot price of gold or silver, what governments and central bankers know is that a rising gold price is an indication of a failing currency. And so they suppress the price because there's an unlimited, really an unlimited amount of gold and silver contracts that can be created. And this is gold and silver that does not nor ever will exist. And before they changed how they accounted for it at the Bank for International Settlements, which is a central banker's central bank, and they track the global derivative markets, for every 1 ounce of physical gold, there were 62,000 ounces of derivative gold. I don't know. I'm thinking that could really suppress the visible price. And even in the US, in the FDIC insured banks, they had to readjust how they accounted for their gold and silver contracts, and the level of derivatives on gold and silver, shot up, to the moon.
I saw that. It was March this year, wasn't it? Which
I believe it was.
corresponded with the big spike in gold to like almost 2,100.
Right. But, that is about suppression for the banks and trading revenues. So yes, I do agree. It's at the end, when all confidence is lost, that you will see gold and subsequently silver, but definitely in all my studies, gold during these periods of time has ended up outperforming because it's the primary currency metal, and they revalue the fiat money that has no intrinsic value against gold money that's all intrinsic value. And it isn't intrinsic value because I say so. It's all intrinsic value because it's used in every single sector of the global economy. So it has the broadest base of demand. But,
Yeah, and I don't think the Treasury or the Fed will have to bail out the gold market like the Bank of England has had to bail out the gilt market. And so.
And I think I think the government is going to be bailing out the Treasury market as well. The Treasury market is the foundation of the global financial system. And for, a number of years now, I've been watching the reduction in liquidity, the ability to buy and sell without moving price. We've been watching that deteriorate. And wow. So yeah, I think we're probably going to end up having to bail out if we're not already doing it in a backdoor way.
Yeah. I remember when I started out in the business, I did trade cash treasuries, and you could they were quoted in 30 seconds. Most people don't know that. They think that they're quoted, and we used to trade in 1/8 of a 30-second. But now I'm hearing that even the treasuries that are off the run, the old treasuries, their bid and offers are better than the new ones, which is
usually the opposite.
Yeah, so it's really bad, and I think they've been talking about for the last 2 years since March 2020 on how to solve the problem. But I think they even have Tim Geithner working on it, which is not very encouraging in my opinion.
Oh, no, it's not. He was there in 2008. What a bang up job he did. Let me tell you. So he's not very trustworthy.
You started out on Wall Street as well. Maybe you could tell the viewers what you did on Wall Street and who you worked for.
I worked for Lehman. I worked for Shearson Lehman, and I started in 1986. And that's actually what led me to studying currencies in 1987, because I cut my teeth on government bonds. And even though I worked primarily in retail, I did have some institutional clients, like people that own banks. So we would work, buy treasuries and then sell calls against the treasuries and things like that. Very conservative kinds of moves. But having cut my teeth in the debt markets and the bond markets, one day I happened to stumble across a non-dollar denominated bond. And I'll never forget it. It was a 5-year piece of paper. It was McDonald's, which ethically I wouldn't do today, but back then. So it was AAA rated, and it was a New Zealand bond paying 12.75%, which was significantly higher than what we were getting on 5-year AAA corporate paper in the US. So I called back in those days, you could call the head of any trading desk. So I called the head of currency trading and I said, I want to make sure I'm understanding this right before I work with it. And she actually started teaching me, and I started learning about currencies and then ultimately currency life cycles. And that's why the nominal confusion, oh, the strong dollar against the weak, whatever.
Yeah.
It's relative. They're both losing purchasing power. And we know that through the global inflation.
Yeah.
But ultimately, studying currency life cycles since 86, I started to see a repeatable pattern, and it happens every time. I mean, there have been a lot of government debt-based currencies that have collapsed over the years. And so I know without one doubt in my mind that we are at the end of this current experiment. And I don't like at all where they're taking us. And by them, I mean the central bankers, the IMF, the International Monetary Fund, the BIS, all those guys in power, the World Economic Forum, all those guys. I do not like where they're taking us. And I'm old. I just turned 68. But my children and my grandchildren and the great grandchildren that I don't even have anymore, that's for me, that's why I do this battle. Because
I agree. That's good. I mean, that's the way I look at it. Even I don't have grandchildren, but yet, but
the greatest thing in the world.
Even if I didn't, I still want to try to do something right in this world. So it doesn't even matter if you don't have children. But
no, it doesn't.
The thing about currencies as well, you could have bought that bond. You could have said, well, 12.75%. That's a great. But then you have to account for the currency, because if the Kiwi dollar drops 20% over the next year, yeah, you're going to get 12.75%, but you're going to lose 20% as well. And the other thing about currencies that most people don't understand is that prior to 1973, currencies were fixed against each other because they used to be fixed against gold. And the dollar index was created when they abandoned this fixed rate regime, which is really crazy. It's like changing the length of an inch or every day. Can you imagine what trouble builders would have measuring things? But and the dollar index was created for that, to measure the dollar against other currencies. And guess where the dollar index was in March 1973 when it started out? It was at 100. And now we're like maybe 112 or whatever. I don't know where, but it's not that, it hasn't really done that well. It's done a little, but gold was I think $85 so that's what people need to understand.
And it's even, they do need to understand that it doesn't matter. I mean, if you look at Zimbabwe, you have billionaires there that can't buy eggs, right? So don't get blinded by those numbers and don't marry them. But that's what people do. They knew that people would marry the legal money of the state. And they also knew that not one man in a million understands inflation. And as it turns out, even the central bankers admit, we don't really understand inflation.
Oh yeah, that was right. Wasn't that Powell who said that, wasn't it? Yeah.
Yes, it was. And I think Christine Lagarde also agreed with him on that one.
Yeah. Well, I remember actually there was a congressman, I think I forgot his name now, but he was from Ohio. I think it was February 2021. He said, don't you think the fact that M2 has gone through the roof, isn't that going to create rising prices or inflation? And he said, no, they don't have any like a relationship, and that's what Powell said. He just basically said, oh, no, it doesn't matter. M2 doesn't matter.
Yeah. Well, that's because on the, this is really hard for me, honestly. And I'll tell you why. because all of the inflation from all of the QE money that they did starting in 2008, 9, it was March of 2009 was the first QE. And all of that inflation was held inside of the targeted markets that the central banks wanted to reflate: the stock market, the bond market, the real estate market, right? So they could come out and say, oh, well, inflation is not really that much. But if you go into the Federal Reserve Education Department, the FRED, F-R-E-D, and you put in the search bar purchasing power of the consumer dollar, and you look at what it's done just since 2008, it's all about declining the purchasing power. And I seriously question how accurate that graph is, but at least it's probably more honest than they're coming out and saying, well, no, it doesn't really matter. So that's where the inflation was held. Now it's not held in there anymore. And they've decided, the central banks have decided to pop all the bubbles that they flipping created, but they never look in the mirror and say, yeah, we did that, we were wrong. No.
Oh, they always blame someone else, like Putin or whoever.
Right, or the supply chains, or
Yeah.
this or that, and
COVID.
COVID,
Yeah.
which the timing of all of this, frankly, is really interesting to me.
Yeah. I wanted to talk a little bit about gold and silver. Maybe you could tell us what do you think is going on in that market, and the difference, of course, between the spot and the physical market, and maybe you could tell the viewers as well how ITM trading tries to help people with their knowledge of gold and using gold and silver to protect some of their wealth.
Yeah, absolutely. First of all, I think it's really interesting that when you look at the spot market, as you said earlier, Mario, that the spot gold market is down roughly 10%. But demand for the physical market, so physical gold, physical silver, that demand is through the roof. And so the premiums that you have to pay in order to get it, because that's a true supply demand market. There is a finite amount of silver in the world. There is a finite amount of physical gold in the world. And, you know, in the Wall Street, they can create as much as they want. So you're seeing this huge premium. And in fact, in the collectible market as well, you know, I just pulled up a couple of long-term charts on both just the normal kind of collectible like this, and then the very, very high end where you might pay multi-millions of dollars for 1 ounce of gold. And both of those markets have recently broken a very strong resistance level. The common market, the one that's more like this, just broke out. But the smart money markets, those that are paying like many millions of dollars for 1 ounce of gold, that's actually broken out very, very strongly. So what that tells me is that the smart money is absolutely moving in this direction. You know, even aside from central bankers who frankly know, you know, who knows more about the fiat money than central bankers. And they're accumulating physical gold hand over fist. Once it comes off the market, it's not coming on so easy, right? Because people, they accumulate it, they stack it, and they don't liquidate it. So this is the only asset that is truly outside of the system and runs zero counterparty risk. Any of those fiat money products, you know, including, you know, the bills, those are notes. Those are all debt instruments. They're all counterparty risk. Do you trust them? I think that's really the question that people need to ask themselves is, do you trust the central bankers to have your best interest at heart? Because we haven't seen that in any crisis at all. I mean, definitely they pick winners and losers. Do you trust the government? Like you said, he's eating an ice cream cone saying, I don't care about the strong dollar. Well, that strong dollar reverberates through the world because, as you were saying, the currencies used to be pegged. The dollar was pegged to $35 for an ounce of gold. We reneged on that because we just inflated that proportion all out of whack. So the world was actually in the 60s, they were actually converting their dollars into gold and pulling gold out of the US system. Nixon had to renege on that agreement in 1971, disallowing governments from being able to convert their dollars into gold. And we had less gold in deep storage than we had prior to the confiscation back in 1933. So I understand why he did it. It was temporary. And I guess temporary can be relative because ultimately we're going to have a component of gold back in the system again to get people to have that confidence and use the currency. That's what history tells us. But what I'm also seeing is a shift towards CBDCs, which is programmable money. I mean, at least the physical dollar bill could preserve your principal, but they have used up through inflation all of your purchasing power. They got to attack your principal. If they have a central bank digital currency, well, they can just, and they talk about this, yeah, we can just adjust that constantly to get what we want. Oh yeah, that's who I want controlling my life. So what gold really does is it is completely outside of the system. It runs no counterparty risk. It is absolutely a proven inflation hedge. It is absolutely the go-to safe asset during political turmoil, which I think we can all agree we're definitely in that circumstance. And what we do at ITM is based on my studies of currencies and those repeatable patterns, we put together, it's not rocket science, actually pretty simple. We put together a strategy. I did it for myself before I even went to ITM in 2002. But that's based upon those repeatable patterns because, you know, something's happened well over 4,800 times. The same way 100% of the time, and we're doing the same thing. I mean, I can't guarantee tomorrow, but my bet is we're probably going to get the same result. I don't think this time is different. Do you?
No, I don't. It's just that it's an anomaly the last 51 years in monetary history. It's never happened before. Yeah, and I know the the fiat dollar has gone on for a long time, but I think it's on its last legs, and it's must be difficult for people to like realize that because they told the dollar is really strong, but I mean, look at the yen. It's gone from $1 about 114 yen in the beginning of the year, and it's now almost 150. So you could argue they should take the yen out of the dollar index basket and put the ruble because the ruble is much more.
Why not?
Yeah, because they changed the basket in the Nasdaq and the Dow. You know I think the dollar index basket is obsolete. Do you could you tell the viewers about numismatics and why you think it's important for U.S. investors and how that's related to the confiscation in 1933?
Oh, absolutely. You know, there's no doubt in my mind, but that I have been groomed for this moment in time. And when you get as old as I am and you have a chance to look back on your history, you can see that. So I had an Uncle Al who was a major antique dealer back east, and he was my favorite uncle. And one day my parents and I were at his house, and he really was the one that taught me how tangible assets move. And, you know, from undervaluation to fair valuation to overvaluation. And it's like a constant infinity sign. my parents and I were at his house one day, and he said, come here, I want to show you something. And we went in one of the back bedrooms, and he had 2 giant floor safes. Now, remember, I was like 10 years old. So, but they looked like they were big safes. And he opened up the doors and he said, if anything should happen to me, Aunt Bertie will be well taken care of for the rest of her life because of what I have in these safes. So I turned around and I looked, and you could not fit even one more pre-1933 coin in there. They weren't slabbed. This is slabbed in a hard tamper-proof case. They were just raw, and they were stacked in there. I can't say that I really understood what this was until one day when I was writing, and I said, if you were alive like I was in 1971, and then it hit me that this was 1964. It was illegal to hold more than 5 ounces of gold in 1964, other than in the form that he was holding it. So the pre-33 coins, that was his collection. And he could use it in the normal marketplace. So now we speed up. Truthfully, with all the market manipulation and all the financialization in all of these markets, we have all been subject to the governments and central banks' illusions. And, we've been robbed since the day we were born in terms of purchasing power. Go on their site, look at their purchasing power chart, and you can see that. It is very hard for me to imagine that they've been confiscating my working wealth since the day I was born, and right at the end, they're going to stop and go, oh, you know what? You were smart enough to buy gold. We're going to let you keep that wealth. So I personally believe and we saw it in India. I mean, we've seen it recently in a number of different countries where gold has been confiscated from their citizens. So this is not ancient history, as well as it's kind of a combination. So I only personally do the pre-1933 collectible coins, because even though I promise you I did not pay $1 million for this coin, okay? But I want to be in that category, because eminent domain laws say that the government wants something, they can take it, but they have to pay you fair value. Well, first of all, I know that the spot gold market or the spot silver market is not fair value for physical gold and silver. I already know that. So they can manipulate that. And I would imagine, because they want easy cooperation, that it could look something like this. I don't know, let's say the spot market's at $2,000 when they decide to do a confiscation, because most of the physical is held in IRAs anyway. And so they'd say, okay, you got to turn in your gold, but we're going to pay you $3,000. And most people, that nominal confusion kicks in and they go, well, wow, gold is only worth $2,000. They're going to pay me $3,000. Okay. I mean, this is what they did back in 1933 anyway. But as soon as they get the gold,
it's going to go a lot higher.
Then it gets revalued.
Exactly. 10,000. Yeah.
Yeah, or 20 or 50, or I mean, who knows how high in nominal terms that gold is going to go. But somebody that did indeed pay, $8 or $9 million or $15 million for 1 ounce of gold, they're not turning it in for $3,000, right? It's a collectible. And I kind of feel like anybody that can afford that either makes the laws or has the ability to influence those that make the laws. So I kind of look at it like, what if I'm right and what if I'm wrong? I'm still buying it so far below its true fundamental value. Doesn't matter whether or not I'm right or wrong.
Yeah.
So it's my insurance.
Yeah, and I think in 1933, the Secretary of the Treasury was a guy called John Wooden.
Yep.
And he put that in the Gold Confiscation Act, the collectible, because he was a coin collector.
And that was a way for him to be able to continue to accumulate gold without oversight.
Yeah. Also
Because if
the
you were a jeweler, you could, but
yeah,
you could still accumulate gold as you
yeah,
were manufacturing the
yeah,
jewelry, but
yeah,
it was with oversight. You
yeah.
didn't want any oversight. Me
And
neither.
also, I think the 1947 restrike of the Libertad Mexico gold coin, that's part of the collective, that's part of the list, I think. And I think I heard of people like John Exter. You probably heard of John Exter.
Of
He,
course.
he worked for the Fed at the time, and he was buying gold sovereigns. The British sovereigns were considered collectible as well in the US.
Yeah, well, in the early 60s, President Kennedy came out and gave a similar status to those foreign gold coins because he wanted to import a bunch. So, yes, I actually like that for barterability,
Yeah,
you know, because they're different sizes. You can
yeah,
do, they don't, you know, here happens to be, you know, all different sizes of gold
yeah,
coins.
yeah. What
And
about
that's what you want.
Yeah. What about silver? How do you look at silver? And do you also like the US? Is there any kind of, they haven't really been confiscated before silver, so I don't think there's the same problem.
Exactly. So for silver, I mean, you know, these happen to be peace dollars, but I mean, I have the new, you know, the new silver eagles. Uh, I happen to think that the Austrian Philharmonics are the prettiest coins with all the musical instruments on, but I don't care. I'll do rounds. Gosh, I'll even do I have it in here? Yes, I do. You know, that's the thing that people need to understand too. This is a sterling silver chopstick, okay? And you know, silver and gold in any form is monetary at its base. So if you happen to have 925 Mexican silver jewelry, that's 92.5% pure. Sterling silver is
Yeah,
92.5% pure. This is 92.5% pure. I
yeah,
used to be able to get this kind of stuff flatware, picture frames,
yeah,
bowls,
yeah.
you know, so silver basically in any form.
And are you seeing like, because I hear a lot on YouTube that there's a lot of the premiums are really high now for like silver
Very.
eagles and also the pre-65 silver.
The premiums are high on the physical markets, period, because demand is outstripping supply. And that's true not just here, but in China. I was just reading an article the other day. I think their premiums are 45 bucks above London spot.
Yes.
So
Yeah, I saw that as well. And the other thing, have you seen like big investors coming and demanding, asking for a lot of physical silver and gold? Because
absolutely.
other dealers, there's a story a few months ago about the Texas billionaire that bought 900,000 silver eagles.
You know, absolutely. The smart money, you know, I mean, you can look at the charts and the graphs in the only physical area. And you're seeing that the billionaires, those that really have the money to buy 900,000 silver eagles or however, $8 million in gold or whatever it is, that's what I'm telling you is I saw a massive breakout, not the beginning of the breakout. The beginning of the breakout is down at our level, right?
Mm,
Just a normal level. But the smart money, yes, absolutely. And there's ample evidence from it.
yeah.
Ample
Yeah.
evidence.
And what would you say to someone who hasn't never bought gold or silver, how they should start and how they should they dollar cost average, or do you think it's getting near a time where it's going to be really hard to get any, or what's your view
Yes.
on that?
That's a great question. Number one, if you've never done this before, I think the single most important thing is to be working with a reputable dealer. Okay, so that you're actually getting what you think you're getting, which is another reason why I like them slabbed because this guarantees their authenticity and that they are what you're saying that they are. There are some really simple tests, even with magnets. I'd say keep a magnet in your pocket because gold and silver are not magnetic. So that's another way to test. But I think work with a reputable dealer. Dollar cost averaging, I mean, everybody's got to do what they're comfortable doing. But quite honestly, where we are in this trend cycle, you know, if you've got cash that's sitting there losing value through inflation, convert it to physical gold and silver in your possession. In your possession. Because if you don't hold it, you don't own it, and it does not matter what your perception is in a court of law. And the reason why we do that strategy is because it takes a look at what your goals are, and it helps you put together a gold and silver portfolio to help you sustain your current standard of living. You know, with real estate, there are property taxes. Real estate's immovable property. You cannot put it on your back and walk away. So governments will use this to tax you more because, you know, what are you going to do? You're going to pay the taxes, or you're going to have to sell the property or lose the property, even if it's paid off and you can't pay the taxes. So part of the strategy is to make sure that you can sustain your current standard of living. And personally, I do that mostly with silver. Silver for me is about barterability. But there's also taxes if you have illness, things like that. You really it needs to be customized approach. And that's what we do at ITM. And then you want to be in a position to take advantage of what's actually happening in these markets. Because right now, and you've been in these markets long enough to see those cycles, things are still, even though stocks may be down 30%, they're still severely overvalued from all that liquidity. So that's got to work out of the system. And we're going to see who survives, right? Because there are a lot of zombie firms that don't earn enough to pay their interest, let alone any of the principal. And so far, the banks have just allowed them to roll that over and take on more debt. But in this environment, there are going to be a lot of companies that do not survive that. So then by the time that all gets washed out, they're going to probably be severely undervalued, like gold and silver is now. Well, you've now held your purchasing power, and you can convert into these income producing assets when they're dirt cheap. So we take a very holistic approach, and anybody that's going in, that's the way I'd say you should do it. You know, you put the horses before the cart. What are your goals? And what do you have to work with? And what are you trying to accomplish? And then that guides you to the kinds of gold and silver and what you should do. I'm not really, I mean, you could say I'm kind of a dollar cost averager because I've been buying it for a very long time, since 2000 and, well, actually before 2002. But in earnest, 2002, because that's when I knew we were at the end of the system cycle. But I think right now you need to establish your strategy and then go in and buy as much as you can and do it as quickly as you can, along with food, water, energy, security, the barterability, which for me is silver, wealth preservation, which for me is gold, community, which brings a lot of different talents together, and shelter. These are the things that we need no matter what is happening to sustain a reasonable standard of living. And a lot of people are realizing how shy they are of being able to sustain themselves reasonably. You know, energy, big issues around food and energy. I grow 85-90%. If I had to, and when I had to in March and April of 2020, and after that, 100%, I can eat off my property. And solar for renewable energy, water with filtration. So I think it's important for everybody to take a very holistic approach
Yeah, and as I said in the beginning of this interview, we have a special link here in the description if you wanted to talk to Lynette and anyone else at ITM Trading. You get a free gold and silver wealth strategy call with Lynette. I'm going to put a link
Well,
below in the description.
with my team members,
Yeah, with your
not
team
not
members. And
necessarily with me.
yeah, with it, yeah. And there's a phone number there as well. And before we wrap up, just wanted to ask you if you've seen this representative in Congress. I think his name is Mooney. He's come out
Oh, yes.
with a gold standard bill. Do you think it's going to get any far that bill? And don't you think the Constitution already provides for sound money? So this is like actually superfluous.
Well, definitely the Constitution supports a sound money system, which has been abused over all this time. But actually, what I think about this bill in the short term, then it's impossible because you cannot back, and I've heard this a lot, oh, China's going to back their currency with gold, or Russia is, or what have you. As soon as you do that, it fixes the debt levels where they are, and they're already not payable. So they have to first hyperinflate that debt away, which then means that everybody has lost confidence in the currency. And so we're kind of on the cusp of that, I think. But on the other side of it, when you're trying to get people to trust the government and to trust the currency again, they do put a component of gold in it. And so I think that setting up that law now is maybe possibly a precursor to bringing it in after they've hyperinflated all the debt away. And at least it's already inside the system.
Makes sense. Yeah. Yeah.
That's yes, because I've gone through it, and yeah, that's what it seems. I mean, everything in that bill is accurate as far as all the data goes and how the currency's been debased, etc. But they really can't do that until they get rid of all of this unpayable.
Yeah.
Then they have to do it.
Yeah. So yeah, as we wrap up here, Lynette, maybe you could tell the viewers where they can find your work, a blog. You have your YouTube channel as well, and maybe some words of wisdom as we wrap up.
I'll do my best, but yes, you can search for ITM Trading or Lynette Zang on YouTube. Pretty prolific on YouTube. And we have a new channel as well. It's called Beyond Gold and Silver, where we try and meet people where they are in terms of food, water, energy security, barterability, wealth preservation, community, and shelter, to help you get fully prepared, not just in the financial area, but that's critical that you have that foundation. But beyond that, you need all of those other things. So we try and help you if you're in a little apartment or if you have 1,000 acres, you can go there. And so we publish a lot on that channel as well. I'm pretty active on Twitter, actually. So you can see what I'm looking at. I will frequently, if I think about it before I finish reading it.
Is it at ITM Trading or at Lynette Zang?
Let's see. It is Twitter, ITM Trading _Zang. Z-A-N-G. Okay. And that's important because we do get imitated a lot, and I promise you guys, if you go on and anybody ever asks you for any money over Twitter or anything like that, no.
Yeah,
okay? That is not us.
YouTube bot as well with the WhatsApp. I get a lot of the YouTube bots. They're annoying.
They're very annoying. And, just know that we are never going to ask you for money over any kind of social media, period. End of discussion. So if they do, you're in the wrong place. And also we're on Instagram quite a bit and Facebook, and we do podcasts on Spotify, Apple, all the major entities. So pretty darn active, pretty easy to find. Just Search my
Oh,
name.
all right. Great. Great. And the wise words at the end, Lynette? Words of wisdom.
Words. Okay, it is time to stop procrastinating. If you're thinking that you're looking at price to get in, just start building your gold and silver physical only. Seriously, you don't hold it, you don't own it, get it done, and get it done as quickly as you can, because I mean, I don't like what I'm seeing. Do you?
No, definitely not. So Lynette, yeah, I don't know why we waited so long, but hopefully we'll talk again soon. And I wish you all the best.
I right back at you, and I'd love to come and visit you. So, but it's quite interesting what you guys are going through in the
Well,
UK,
it's quite
and it's
cheap
been
now.
too long.
It's quite cheap for you to come over now. So
Maybe I will.
yeah, it's almost 1-to-1.
That's true. That's true. And
Yeah.
I'll tell you, this is like a little aside, and it's kind of like a personal thing. So I
Yeah.
was lucky enough to get to go to college in Roxton in England. And what the souvenir that I bought for myself were 4 place settings of Minton Buckingham. And I always intended to finish that set up. Well, I finally did. All these, that would have been like 1973, probably. Yeah, 1973. So I have a very warm spot in my heart for England and the UK and for you. And so, yes, it should not take that long, but I'm so happy I finally did it.
All right, great. Thank you and take care.
Bye-bye.
Bye.